Welcome to Withum's fourth annual Financial Services Business Symposium. Thank you all for joining us this afternoon. Today we'll be talking about the next chapter in alternative investments. What's new, what's next, and how you can stay ahead. From private credit and evergreen funds to AI shaking up fund operations, there is a lot to cover. So over the course of the afternoon, you'll hear practical insights on compliance, tax updates, and smart ways to scale, all while earning those valuable CPE credits. Before we dive in with our keynote speaker, though, a few housekeeping items. There's 2 items to ensure that you receive your CPE credit. You will need to answer the polling questions throughout each session, as well as complete the survey that's at the bottom of your screen. The survey can be completed at any time during the event. Without further ado, let's kick off the exciting agenda. We're honored to welcome Pocket Sun, co-founder and managing partner of SOGAL Ventures, for our keynote conversation where AI meets experience and the next generation of investors. Pocket is a true trailblazer in venture capital. At just 24 years old, Pocket co-founded SOGAL Ventures, the first female-led millennial VC firm investing in diverse founders worldwide. Today, SOGAL has backed over 100 startups across the US, Asia, and beyond, championing bold ideas and breaking barriers for underrepresented entrepreneurs with multiple unicorns. Recognized on Forbes 30 Under 30, featured by major global media, Pocket brings a unique perspective on how technology, generational shifts, and evolving investor expectations are reshaping the future of finance. This afternoon, Pocket will share insights on spotting real innovation in an AI-driven world, building inclusive investment ecosystems, and what these changes mean for all of us navigating the next chapter in alternative investments. Please join me in giving a warm welcome to Pocket Sun.
Thank you. Very excited to be here.
So to start us off, let's begin with the track record. In our industry, we often talk about risk management, but venture is really about risk selection. When you look back at the earliest days of SOGAL back in 2015, most of the market saw niche or charity where you saw returns. What was the specific arbitrage you identified that the others maybe missed?
To us, the arbitrage was very simple. We invest in underrepresented founders, undercapitalized geographies, and underserved problems. Back in 2015, most of VC funding was highly concentrated in a few zip codes and basically one demographic. And Sequoia had just started investing in consumer, which previously was not seen as a VC category. And we have, women and diverse founders solving urgent problems for the overlooked majority. And these include healthcare, family tech, sustainability, design-driven businesses, yet they were entering the market at 30 to 40% lower valuations than their male peers with similar traction. And there was research showing that women-led startups are actually producing 3 times more revenue compared to their male peers when raising the same amount of capital. And to me, that was not impact investing. It was solving a massive market inefficiency and buying high growth assets at a discount. And we later proved this arbitrage with our Fund 1 portfolio. Our first 2 fund investments went from seed stage to unicorn status in just under 4 years.
Wow. So it's been a decade since those early bets. For the emerging managers in this room or for their strategic partners here that support them, what's fundamentally shifted in the landscape since then, and what have you seen stubbornly stuck?
So what's shifted, I think, is the face of venture. The barrier to entry to start a fund these days has been largely decreased thanks to the existence of many of you in the audience. And we have a great number of diverse GPs who look different and think different. And a lot more diverse founders are now getting funded. We're seeing, women founders making history in the past 10 years, including the youngest female CEO to ever have an IPO, and the first time ever that a company founded by 2 women co-founders got to take their companies public. So we're seeing history being made in real time. But what is stuck is, I think, the pipe of capital. Institutional LPs, say that they want innovation, but when we look at their checkbooks, they're still following big legacy firms and spin-out managers. So the glass ceiling moved from breaking into venture capital to scaling a firm beyond Fund 2. And this makes me think, is there more to it than the same few institutions that determine who gets to have a Fund 3?
So for the audience, I think we're going to go to polling question number 1. see. When evaluating early stage investments in an AI-driven world, which factors do you believe will matter most in the next 5 years? Founder diversity and lived experience, technical innovation and defensibility, market timing and scalability, or D, alignment with government or industrial policy? Give everybody a minute to answer. Oh, there we go. So it's interesting. A lot focused on technical innovation and defensibility, and then spread somewhat evenly amongst the other areas. Okay. So let's head back into bringing us to market structure. So we're seeing massive capital inflows into the asset class, yet to your point, returns are compressing. So if you zoom out 10 years, what's the structural shift that is quietly building now that most people haven't noticed yet?
Yeah, I am glad that the polling question actually talked about alignment with government, because this is what I'm seeing. We're witnessing the divergence of venture. On one side, we're seeing the formation of big venture, the rise of the government venture complex. So I think venture capital, when it comes to like A16Z, Sequoia, like they have become an arm of industrial policy. Like VCs now have voices in the White House. I mean, JD Vance used to be a VC. And there's more and more connection between the VC space and the government, who are, like we're manufacturing exits through government defense contracts and procurement. And this is huge capital, calculated paths, and essentially outsourced economic development in partnership with the state. And this year, more than ever, I'm hearing at VC conferences about defense tech, about space tech, about like semiconductor, about how startups will support our nation's allies and fight against our enemies. And this merge of private capital and public power remind me a lot about China, which is where I grew up, and how China is doing venture capital is very much, the state has a big role to play in it. And the Middle East also has a similar model to the extreme, where there's very little room for private venture capital because innovations are all funded by the government. And on the other side, you have what I call artisanal venture. And this is where I live. And it's almost a nostalgia business. You're still hunting for the outlier. You're still looking for the same risk reward profile. Decades ago, you're still looking for the cultural shift and the weird obsession. And for everyone in this room, I think it matters because you cannot serve these two groups, like the big venture and the artisanal venture, the same way. And there's this recent article written by Sinead O'Sullivan called "Honey, We Need to Talk About Venture Capital" that really dives in on this, and it's a really enjoyable read.
So that's a major distinction. If big venture becomes this industrial complex, what's the opportunity for the emerging manager, and does artisanal venture still make money?
Absolutely. But I think artisanal venture need to stop trying to become mini Sequoias. And if the returns on generic software compress, venture has the opportunity to become something else, because there's so much untapped LP power with retail investors, families that have accumulated wealth but have never touched venture capital before. And I think artisanal venture needs to be sharp and experiential. So sharp meaning, small bets in deep niche that don't fit the billion-dollar paradigm. And we need to invest in founders that don't fit the big venture stereotypes. And it must be experiential in that I keep thinking, like, can venture capital become more like collecting art? Can it be a membership club? Can it be, inspiring? Because if you think about it, when you invest in venture capital, you're not getting much in the 10-year time frame except for a quarterly report. But what if it can open doors for you and open up possibilities for you and create all these, interesting ideas while you're at it? I think that's where venture capital could go.
That's really interesting. I know we talked a lot about the community and the experience of investing. So next, I think we're going to launch polling question number 2. And I did get the advice. I closed the poll a little too early on you guys last time. So for this one, I'll hopefully leave it open longer. Which venture model do you think will dominate the next decade? A, government-backed big venture focused on defense, space, and industrial policy. B, artisanal venture hunting cultural outliers and niche innovation. C, a hybrid approach blending institutional capital with boutique funds. Or D, neither, something entirely new will emerge. Give everybody another few seconds to answer the question if they need to. Okay, I think we're gonna close the poll in 2 seconds. Get those answers in if you need them. And we can move on, look at the distribution again. I've kind of covered each of the answers, a little more focus on the government-backed big venture. And then the hybrid approach. So I have a little bit of both. And then we have some who think there's something totally new. Okay. So looking towards the future, everyone here is thinking about AI. It's a hot topic these days. You hear it really anywhere you go. As someone who looks for compassionate futurists, are we in an AI bubble? And how does a manager from China running a US fund view this hype cycle?
I think from a valuation perspective, is AI in a bubble? Yes, it is. I've personally participated in some of these big AI names secondaries, and the valuations are just at such a premium. And I've never seen so much secondaries activities in the past 10 years of me being a VC. But I think in a bubble is where exits happen, where money is flowing, and how when investors can make DPI. From the second half of 2022 to mid last year, we were not in a bubble and we were miserable as fund managers. But from a utility perspective, I think we haven't even started. And the opportunity where I'm betting are, number one, compute is becoming the new oil and gas. When we talk about AI, we talk about cloud, we talk about these abstract concepts. However, AI is built with a huge amount of electricity, metal wires, water, and land. AI infrastructure has become, I think, the battle of two nations, US and China. And the US power grid is not as updated or robust. So it'll be interesting to see how it all unfolds. And I know this has become a global battlefield. Data centers are being built in the Middle East, in Africa, trying to power the next 10, 20 years of compute. So as a fund, we have invested in a company called Silicon Data. That's the Bloomberg of compute, helping people see trends and benchmark pricing when it's a very opaque market in the past. And number two, we're seeing opportunities in the application layers that help humans understand ourselves better. And this year we invested in a company that analyzes your voice with AI for behavioral patterns and to precisely match you to a job. And it reduces hiring time from months to days, and the retention is through the roof. And in the future, we can see this technology also do matchmaking for dating, for financial risk assessment, for school, university enrollment, etc. So I think we're still only scratching the surface when it comes to AI use case.
So as these tools continue to evolve, they're automating analysis, coding, and even creative work. So what is the new alpha for an investor? If AI can analyze and predict trends better, what's left for the human to do?
I think we're entering an era that's kind of humbling, where we will be outcompeted in intelligence. And I think the new alpha for humans is somatic sensing. And it used to be, we live in our heads, everything is through, we need to be brainy, we need to, we need to work hard. But I think AI is making it less reliable as a tool to win. And I think this leaves us needing to remember what being a human really means. And we need to lean into our intuition, emotional intelligence, and our physical bodies as well. What a foreign concept. So I think, now, like, for example, when you look at a piece of art, like AI could memorize the art history, our artist biographies much better than we are. But only we can look at a piece of art and feel either, awe or disturbance or serenity somewhere in our body. And I think that is everyone's superpower, and we need to live in our bodies more. And I think that, strangely, will apply to how we invest as well.
That's great advice and a great way to think about it. Certainly a more hopeful view than some have, that technology will force us to be more human. If you could summarize the relationship between AI and the human experience in one sentence, how would you do it?
AI will handle the doing, so humans can finally get back to being.
I like it. So now we are going to launch the third polling question. Third time's a charm, and hopefully we'll keep it open the whole time we intend. How do you feel about the current venture capital landscape? A, very optimistic, B, cautiously optimistic, C, neutral, or D, concerned about challenges? Almost at 80%. So maybe give it another few seconds for everyone to get their answer in. One more second, and then we'll close it. Okay. What is our outlook here? We have cautiously optimistic, looks like was the leader, with some neutral and very optimistic. And not too many people are concerned about challenges, but we have a little bit of everything. So moving into our last section, Pocket, you've always been about democratization. So what is the bold dream that keeps you awake at night right now?
Yeah, great question. So 10 years ago, I wanted to really democratize access to venture capital by bringing women and underrepresented people into the three pillars of venture capital. And that is, founders, VCs, and LPs. And in the past 10 years, we were successful in bringing over 250 LPs that are entirely new to venture capital into investing our fund. And in the next 10 years, I have even more ambitious goals. I want to eventually move 100 million people, especially people who have not been invited to the table before, to find joy and fall in love with investing. And I think to many of us, it's kind of a foreign concept to, connect joy and love and creativity with investing. But I think that's where we need to go as humans. And we're not just managing money, but realizing that investing could be the ultimate form of voting on the future that you want to see, and also an extension of your self-expression. So I think that's a really exciting future that I want to build.
And finally, for all the professionals here with us today, what's the one lesson that you wish you knew sooner that you should take back to their firms and try to apply?
Honestly, I used to really dislike the part where I have to manage the back office and, do all the audit, tax, accounting, legal, like all these things that are not in my genius zone. And I realized that, however, like this is the backbone of our business. And to us and to many of my peers, you're not just back office. You're actually the architects of the pipe that allows capital to flow to the dreamers that we are also passionate about, and we are, excited to wake up to support every day. So as the industry splits into, industrial and the artisanal, we really need all of your help to build the structures to keep the artisans alive. And you are what we can't live without.
I love that to end on. So Pocket, thank you so much for sharing such powerful insights today, from the role of AI in shaping investment strategies, how you think about it, to the importance of diversity and bold thinking. You've really given us a lot to reflect on and things to put into action. So your perspective on spotting real innovation and building an inclusive ecosystem is exactly what this industry needs as we all navigate into the next chapter in alternative investment. So thank you so much for joining us today, and thank you everybody for joining.
Thank you, Colleen.